Hey, welcome to Woody's Weekly Wisdom, episode number 33. And this week, we're looking at this headline: Aussie dollar falls dangerously low as US interest rates rise. So for those of you who have been along for all 33 episodes, you will know that one of the things that I aimed to do by looking at these headlines each week was to give you a bit of an insight into how the headlines can often be very, very different to the content and designed to create fear when it comes to your money management and your investing activities. And well, this week does not disappoint because Aussie dollar falls dangerously low as US interest rates rise. So for a lot of you, if you're looking at this and you saw this headline and you're wanting to be proactive with your investing, your first question might be, who cares? Who really cares about the Aussie dollar falling and US interest rates rising? Who really cares about that? And why has that got anything to do with my investments? Because I invest in the Aussie dollar, I buy in the Aussie dollar, so whether it's going up or down makes no difference to me when it comes to my investing. And ultimately, that's pretty much what this article says. But in a funny way, it goes into a number of different ways that the falling Aussie dollar and the potentially dangerously falling Aussie dollar could have an impact on you as an investor. And it gives you a couple of, actually only gives you one. It gives two reasons why the falling Aussie dollar could be good for you, but only one that actually relates to investing. The other one, not so much about the investing. So let's scroll down a little bit. We see this graph where we're looking at where the Aussie dollar might go. And I always find it funny when we see these graphs, and maybe it's just my sick sense of humour, but you can see here on this graph that there's a little red line here saying maybe it's going to fall all the way down here to January 24. But the funny thing is there's an uptick at the very end of this little graph. Now I understand graphs. They go up and they come back down. They go up and they come back down. They go up and they come back down. But at the point that this article wants to tell you that the Aussie dollar is on a trajectory to much lower rates, there's an uptick on the graph. Very, very funny if you have a sixth sense of humour like me. Now, the other thing, if you're into technical analysis, you might look at this and go, oh, that's a double bottom. It's hit the same price pretty much twice. And normally a double bottom would mean that it's going to reverse and go up to much higher levels, just like it did here with a bit of a double top, and it fell to much lower levels. So there's a whole host of things that you can interpret from this graph, but none of them necessarily tell you what's actually going to happen. And so, yes, it could fall all the way down here to 60 cents or less, but nobody, and particularly not this article, are able to provide any evidence that that's going to happen. And if you're investing and managing your money in Australia, it probably has very little impact on you anyway. But let's dig a little bit deeper and find out why the Aussie dollar is so weak. Let's get rid of that. So why is the Aussie dollar so weak? Well, it's simply because the US is booming. And if you've been following along with me, and if you're part of my Wealth Generator program and you've been investing in the stock market, and like we do get some exposure to the US market, we know that the US market's been outperforming the Aussie market for the last 12 months. It's just a fact. And the reason why that is because the US economy is so strong. The number of jobs being created is off the charts, and generally they got their inflation under control quicker than we did. Their interest rates are still rising. Ours have leveled out for now, but there's still talk that they might keep going up. But their market is very boisterous when compared to ours. So that just all that means is that the big financial institutions pour more money into the US dollar than they do the Aussie dollar. And so that weakens the Aussie dollar, strengthens the US dollar. So that's why it's happening. Nothing overly exciting there. Then it goes on to describe a little bit about yields and how US yields are at what they consider high levels, and therefore potentially problematic and all that type of stuff. But to us, generally, not a great deal of interest in the yield curves for now. We don't need to get too fussed about them. So then the article moves on to talk about, we've got weakness in China, which is also putting pressure on the Aussie dollar, and that's fair enough. That's true. There are a lot of issues in the Chinese economy, and so there's a lot of waiting and seeing what goes on with the US economy to determine what impact that might have in Australia. But for now, that weakness in China is producing more weakness in Australia. So that's pretty reasonable for this article to suggest that China has had an impact on our Aussie dollar. So now we move into, well, what impact is that going to have on your investing? And just in between all the goddamn ads and promotions of other articles, there's this little bit here about how to invest and how to take advantage of this. So one of the suggestions to take advantage of the weak Aussie dollar is to invest in US stocks. And because the Aussie dollar potentially could fall in value, the stock market doesn't have to do anything for you to gain on those investments. Now that's true, but again, not many people invest in the stock market for short-term gains from foreign currency fluctuations, other than the very large financial institutions. So if you're going to be investing in US stocks and transferring into US dollars, you want to be doing it for the long term, in which case the Aussie dollar does tend to have a natural fit somewhere between 65 and 75 cents. Yes, I get it. It has been as low as 50 cents and as high as $1.10. But I think in the long term, we're certainly not going to see the Aussie dollar at $1.10 for very long, if it happens. And we're certainly not going to see it at 50 cents for very long, if it happens. So it will naturally come back to where it likes to live, in somewhere in between 65 and 75 cents, and maybe at the extremes between 60 and 80. Well, maybe not extremes, but at another standard deviation as such. And I won't get into the standard deviations for you. So that's how you could take advantage of it as an investor. And it goes on to explain that, what I just described there. Talks a little bit about Bitcoin and how it's done well this year, which, is not one of my favorite topics, so I won't go into that too much. But Bitcoin is still around the $27,000, $28,000 mark. So it hasn't done a huge amount of exciting things this year either. And then, we'll go into, this article goes into areas where it suggests the second way that you can take advantage of this, which is pretty much not a way that most people can take advantage of the Aussie dollar, and that is if you're working for an exporter, and so you're selling into the US market and earning US dollars, and that's great for you. But not too many people will switch jobs based on foreign currency fluctuation, and certainly not be chasing currency variations for better job prospects. But it's in there, and maybe if it's something of excitement to you, you can go chasing those foreign currency fluctuations and find a job where it's a good thing for that business. But in a few months' time, you might be looking at that decision saying, well, that wasn't much fun if the dollar does actually recover. So I guess the main caution from this headline, as per normal, we've got to have a caution. The main caution is the fact that falls dangerously low, and then the article goes on to tell how you can take advantage of it falling dangerously low. So I don't think it's something that we need to be overly fearful of. In fact, it's not something that we have to be overly fearful of. If you're investing, just keep doing it. Keep managing your money, keep investing, and once again, don't get caught up in the hype that this article might drag you into and change your investing strategies. That's the key here. We don't want to be changing our investing strategies as a result of something like this article. So hopefully that was helpful. If you're watching on YouTube, do me a great favor, subscribe to the channel, click on the notification bell so that you get notified when these come out, and you can increase the exposure that we get with these videos. If you're watching on Facebook, do the like, share, comment, all of that, and that way more people get to see these videos, and hopefully we can have a bigger and better impact from sharing some financial literacy information and education. Have a great week. That is Woody's Weekly Wisdom, episode 33. I'll see you again next week. Cheers.